In Nigeria, the regulator has proposed a review of investment limits for pension funds in order to help improve portfolio yields and therefore make available long-term financing for infrastructure. Joining us now from our studios in Nigeria in Abuja is Bayo Adeniji, who's a senior technical assistant to the Minister of Finance in that country. Thank you very much for coming through. Mr. Adeniji, the move to get pension funds to finance infrastructure projects, just tell us how the industry has responded to this proposal.
I'm not sure that you stated the proposal as forthrightly as was outlined. There is the understanding that pension funds, being of a long-term nature and are more suitable for long-term investments. And clearly the government is very keen to direct long-term capital to meet long-term investment requirements. However, the plan with pension funds is to retain the full flexibility that the pension fund administrators have to essentially look after people's monies, steward the safety of monies, and then to invest them in attractive investment-grade products. So I suspect that infrastructure, pension fund administrators, we are trying to widen the rules to allow them to look as many interesting opportunities as they want. But the ultimate discretion to invest or not to invest in terms of the safety of pensioners' funds remains with the pension fund administrators. I think the way I heard your question, it seemed as if they were being compelled to do this. Their plans to basically give them more choice, but the exercise of the choice remains their due professionalism and their stewardship of
All right, let's
monies.
just talk about how well developed the industry is. We know that right now pension funds are worth about $11 billion in Nigeria, with potential to invest in infrastructure bonds. Where do you foresee growth?
Yes, I think it's excellent. Just as I started to say a few minutes ago, pension funds, as you know, and pension obligations have a long-term nature. Or at least typically they do. So they are usually around the world almost perfectly made for long-term investment opportunities such as infrastructure. But of course that's not the only long-term investment opportunity that there exists. So there are many, and I suspect that the pension fund administrators will avail themselves of opportunities to invest in good investment-grade long-term projects and or businesses. Now, they will retain the flexibility, as you know, for instance, sometimes to just look at debt instruments, depending on whether they want an exposure to equity risks. I suspect that will depend on whether they're looking at greenfield projects, brownfield projects. So they will basically have the choice, is still what I want to repeat. And we are very happy to be directing long-term monies at the real sector and at long-term investment needs.
All right, with inflation at about 13% year on year, how will it affect the yields on the infrastructure bonds in which they invest in?
I think, if the truth be told, it's very early days in terms of infrastructure bonds. Just like you've mentioned, there's been a groundswell to begin to direct this, but as I speak to you, the investment guidelines are still being circulated amongst some of the stakeholders by the Pension Commission. So I would like not to jump the horse and start to predict what will happen to infrastructure bonds. And again, we have to see the deal flow pipeline that comes through from infrastructure businesses and promoters that will hopefully sufficiently attract the investment world.
All right, we also have a situation where in Nigeria it's the banks that have borne the brunt of the lending for infrastructure projects, and consequently it's pushed the cost of capital up in this particular sector. There is quite a bit of concern that the secondary markets are fairly underdeveloped, especially in the area of corporate bonds. Is that going to count in favor of developing this new system, or is it going to work against pension funds wanting to move into commercial papers? Yes, you've stressed that it's their choice ultimately, but do you think the general burgeoning and fledgling elements of the system will be a plus or a minus?
I think it will be a very big plus. As it is, before the hopefully relaxation of some of the investment guidelines, pension fund administrators have to invest up to 30% of their monies in fixed income instruments. And if the truth be told, at the moment, that's somewhat crowded out by just government issues. So many pension fund administrators would welcome an opportunity to get their hands or get into, as I said, other alternative investment-grade high-yield instruments that gives them a sort of profile, risk profile that they want for their portfolios. We can also expect, with what's going on now, increases in things like securitizations and the sort of secondary activity you expect in the market, where we're basically retailing the stocks to investors who have an appetite to hold these stocks for longer periods. So I do expect the banks, to the extent that they're involved in infrastructure projects and that these are viable investments they've made, to basically refinance some of that on the capital market, which I expect to be ultimately held by quite a number of the PFAs.
And what about them investing their monies abroad? I know that that's a conversation that started to emerge in Nigeria.
I wish I had any special government insight here. I don't. So if you don't mind, I'll speak like somebody in the finance community who's been looking at this for many years. I obviously understand the push, the desire to basically, from a pension fund administrator's viewpoint, to get the best returns for his pensioners and therefore, or his or her pensioners, and therefore to look at the full array of opportunities. However, I'm also clearly sensitive to government policies and the government objectives, one of which is basically to somewhat protect the value of the naira, our local currency here. And if the truth be told, I also expect the government to be fairly cautious as it basically opens this window because of the risk of capital flight. So whilst we can say as many things as we want, I do expect the government to be fairly cautious and basically to take its time in this. It's just one of those things that you have to understand, especially in emerging countries, the governments have to be very sensitive to.
Okay, and finally, Mr. Adeniji, concerns about the viability, as it were, of the Nigeria Stock Exchange. We know that currently it's trading at a 6-month low. Experts don't expect this situation to continue indefinitely, but certainly it will affect the ability to start directing monies from pension funds into asset classes available on the Nigerian exchange. Is that a concern for you?
Not about the viability, which was your initial word in your question. Of course, the market is the stock market. It reflects or it tries to equilibrate between supply and demand at any particular time. Yes, clearly the demand has been weakened by our own local financial issues. And I suspect that the first step to begin to strengthen demand will be the proper implementation, as you know, of the asset management company, which is meant, amongst other things, to address some of the toxic assets or non-performing loans, many of them which are collateralized by shares. So it's a sort of, it's tied in. As AMCON begins to kick in and there's more liquidity into the market, you can begin to expect that many potential or existing investors who have looked at the levels that the markets are trading in terms of fundamentals, I expect to begin to step into the market. So in terms of a first step, I think it will be liquidity, which is provided by AMCON, which will then basically catalyze the other processes, which we expect to lead ultimately in the medium term to a reasonably full market recovery.